Hi, my name is Wayne B. Norris. If you're like me and most of the rest of us, you've seen your retirement funds shrink pretty badly lately. If you're in a union, you've probably taken a way big hit. Public employee, big hit. Private plan, 401k, big hit. Well, a lot of people are really angry about that. And of course, there are a lot of people out there that are running for something or other that are trying to use that anger to get you to vote for them.
Look, those idiots don't even know where we live.
I'm here to announce that I'm not running for anything. But I'd really like to see one thing fixed that would help all of our pension plans. It would also generate huge numbers of jobs, lots of investment capital, and would greatly streamline our economy. And it's not even a new idea, just an idea whose time for action has finally arrived. And it's something that both Republicans and Democrats should really love. But before I tell you what it is, let me first tell you that it's something most people would never suspect. Are you ready? Completely repeal the corporate income tax. As in, zip, finite, done, out with the trash. What? You may be asking yourself, is this guy nuts? Isn't a corporate tax a tax on rich guys like Michael Douglas's character in Wall Street? How's that supposed to help fund my retirement? Actually, I'm not nuts. I'm the guy telling you that you have to steer into the skid in order to save your life, even though it sounds counterintuitive. Now, unless you're nodding your head in agreement with me right now, most of what you think you know about corporate income tax is just plain wrong. So, for starters, it's not a tax on the rich. It's mostly a tax on money flowing into your retirement fund and my retirement fund. Wow. And by the way, it's also a double tax that slows down job creation. But hey, don't take it from me. Ask your accountant. Ask the college professor of economics at your local college. Ask another financial professional that you trust. Or go to Wikipedia and read up on it. Come on, it's 2012. Now, financial professionals have always known this. But because most people think corporate income tax is a tax on the rich, the professionals kind of gave up on the idea of fixing it a long time ago. They just live with it as one of those stupid, idiotic things that's a part of life and you can't do anything about. But because some kind of major income tax reform is on everybody's mind right now, what better time to try to finally get things right for a change? Now, here's the deal. A corporation is not the same thing as a rich guy. It's just a pot of money. Investors, and by the way, that would be mostly you and me in our retirement funds, and yeah, a few rich guys too, put our money into that pot. Corporation spends that money to buy goods and services, and including the salaries they pay to their employees from the CEO down to the janitor, to create valuable goods or services for sale. And by the way, you may think CEOs get paid too much money or they don't pay enough tax. Okay, fine. Maybe you're right, maybe you're wrong. But it doesn't make any difference to what we're talking about right here, because the CEO's salary is just an expense to the company. The taxes that are paid on that salary are the CEO's personal tax. They're not corporate tax, and we're talking corporate tax. Okay, so here's our corporation, and with any luck, there's more money in that corporate pot this year than there was last year. And of course, as everybody knows, that profit is either going to be spent on making the corporation grow, or it's going to be handed out to the owners of the corporation as dividends. And you remember those owners? That's mostly you and me and our pension funds? Okay, now here's the annoying part. Every year, half of that profit is taken in tax before it even leaves the pot. That's right, half between state and federal corporate taxes. Every dime becomes a nickel. Well, no matter what else you think about anything else, I just know you think a 50% tax on money headed for your retirement fund before it even gets there is a bad idea. That's because it is a bad idea. But wait a minute, I can hear you asking yourself, what about all those rich guys who own all that stock? Shouldn't they pay tax? Of course they should. They do. Remember, the profits at the corporation level get taxed before that money even makes it out of the pot. Then it goes to the stockholders, whether it's my retirement fund or your retirement fund or some rich guy down the street. Now, when the rich guy gets it, he pays taxes on it again because he received it. See, that's double taxation. Now, if you don't think that guy pays enough in his taxes, then fine, let's talk about his tax rate some other time. But while we're sitting around arguing about that issue, money's pouring out of your retirement fund like a fire hose right now. Now, this is so important it bears repeating. Most stock in the United States is owned by retirement and pension funds for average working families. 401k plans, CalPERS, teachers' pension funds, association pension funds, union pension funds, and also by the insurance companies that provide their life, health, and disability insurance. So most of our corporate tax comes straight out of your retirement fund, except for this amount that goes to jack up your insurance payments. Ouch! Now, if this seems crazy to you, as it does to financial professionals, that's because it is. So why was there ever a corporate tax in the first place? Well, when corporate income tax was created about 100 years ago, it actually solved a genuine inequality at the time. But that was then, this was now. That was long before there were pension funds. There was long before there was a modern stock market, long before there was even modern accounting. You can read all about it on Wikipedia. But the justification for corporate income tax ceased to exist long ago, and it's still sticking around. In the words of the computer industry, it used to be a useful feature. Now it's just a disastrous, blood-sucking bug. So it's bad enough that your retirement fund is on life support and your insurance payments are too high, in large measure because of corporate income tax. But that's only the beginning. Every CEO in the industry, whether it's the lady down my street who owns 3 dry cleaners to Warren Buffett, is legally required to maximize the benefit to the shareholders. And by the way, those shareholders are your pension fund and my pension fund. And that's actually a good thing, because that's how we're planning to put our kids through college and retire when that time comes. But corporate income taxes often require CEOs to do just ridiculous things in order to minimize taxes. Sometimes they have to do things like, investments in sketchy strip malls, or putting off important projects until later, passing up good deals, all sorts of ridiculous things, just to deliver the maximum legal returns to your and my retirement fund by minimizing corporate tax. In fact, corporate tax is such a bad and inefficient idea that there exist a whole lot of workarounds to it that were created just because it is so bad. Things like subchapter S corporations, LLCs, real estate investment trusts, plenty of others, all exist, and they were created by Congress, but they exist because corporate income tax is such a bad idea. It's like we were forced to drink poison every day, and Congress, in its infinite wisdom, created several brands and flavors of antidote instead of just getting rid of the poison. Now, I can hear you asking yourself, okay, I get it. But 19% of all the taxes paid last year were corporate taxes. Maybe it is a dumb idea. Maybe we do lose much more in inefficiency than we gain in tax. But aren't we stuck? How could we replace all those taxes? Well, the positive effects of removing corporate income tax would be so dramatic and so large that within a year, we wouldn't even remember why we asked the question. If corporate income tax evaporated tomorrow, corporate dividends, including billions going straight into pension funds, would skyrocket. Some funds would be kept for business expansion, of course. But come on, most of them would go to dividends. Those dividends would be paid out. IRAs would fatten overnight. Individual investors would get bigger checks immediately, meaning that they'd have to pay more tax immediately on their income tax as they received the money. Tax revenues would skyrocket. Yeah, some fat cats would get more money, and they'd pay more tax on it. And remember, a lot of average people own stocks. If they didn't, E-Trade wouldn't put that smarty pants baby on all those Super Bowl commercials. Now, what would those people do with all that money? They'd spend it. So there would be an immediate surge in retail sales, which would generate immediate hiring for those most affected by the current recession. It'd be like having Christmas shopping season all year long. Like what you're hearing so far? Stick around. There's more. The international community would be in shock. They'd pull trillions of dollars of capital out of China, Europe, and the Caribbean and invested in the United States because we dumped our corporate income tax. Trillions of dollars would wash ashore in the United States as a result of this. And it gets even better than that. Freed from the need to do ridiculous things to just avoid corporate tax, companies would be free to just go about their business. Those inefficiencies would lead to much greater corporate profits, those corporate profits would end up going into your investment funds and my investment funds. In 2012, everybody from the Office of Management and Budget at the White House to the Wharton School of Economics have their own financial modeling software. And I challenge any of them to model this plan on that software, and I challenge any of them to come up with negative effects from either tax revenues, job creation, personal income, balance of trade, or international investments. I defy them. Okay, so right now you're probably asking yourself, okay, Mr. Smarty Pants, haven't people tried to do this before? Well, remember that good ideas go nowhere without political support, and the key to political support is timing. And if there was ever a right time to get going on this, it's right now. Okay, who would be in favor of this? Well, for starters, anybody who would like to help the average working man and woman in the United States. Wow, that would be what, Democrats and Republicans? Also, anybody who wants to do a quick start economic stimulus without requiring that the government pour money into it. So that would be what, Republicans and Democrats. There you go. Okay, also anyone who hates inefficiency and waste of time and materials. That would be Democrats and Republicans. And anybody who wants to bring billions of dollars of profits and investment capital to the U.S. from all over the world. That would be what? Republicans and Democrats. Wow, is there a pattern forming here? Okay, now I have a disclaimer. Of course, a change like this is monumentally complex. Of course, the economy is like a massive machine with millions of moving parts. All of those moving parts are connected to one another. Some of them are connected in ways we don't fully understand. But come on, if we don't start somewhere, we won't go anywhere. And remember, a journey of 1,000 miles starts with just getting your fanny off the sofa. Now, I have a few requests. Tell your kids, tell your friends, tell your kids' friends, tell your friends' kids. And then when you're done, tell your elected representatives that you told all those people. Remember, this isn't a partisan issue. This is a sanity issue. Repeal the corporate income tax. Thank you very much for your time and your attention. And now please, go out and have a great rest of the day.